IBCL Engineering Limited, a civil contractor, undertook a contract of rupees 12 lakh. Work commenced on the contract on 1st 4/22. Other information relating to the contract for the year ending on 31st March 22 is given below. We have material issued, we have direct wages paid, direct expenses, office overheads charged, plant purchased, material returned to store, cost of plants returned to store, material at site, cash received, work uncertified, depreciation of plant, direct wages, and direct expenses. Now, moving on with these things, let us solve this question. We know on debit side, we record all the expenses incurred on the contract. And on the credit side, we record all the work in progress, material inside, and material return, and all these kind of items. Now, first of all, we will see how much of the material has been issued to the contract. Materials issued. Material issued, we have 3,40,000. Next is 2 direct wages paid. Direct wages paid 2,20,000. In this, we will add the due amount. How much wages are due? It has been given 15,000. So we will add these 15,000 in this. Next is 2 direct expenses. Two direct expenses. Direct expenses are 25,000. Next is, in this also we will add the due amount. $5,000. Here we have 2,35,000. Then we have 30,000 total. After that, office overheads. Yes, these are mentioned as 40,000. To office overheads, we have 40,000. Next, to plant purchased, we have 1 lakh. Next is, we have by work in progress. By work in progress, we need to calculate the work certified. Work uncertified is 50,000. Now we need to calculate the work certified. We will calculate work certified is calculated as 7,20,000 into 100 by 90. 100 by 90. We have 8 lakh. The amount comes out to be 8 lakh. Now, work uncertified will be work uncertified is given as 50,000. Next is buy materials return. Buy materials return 10,000. Buy material at site 5,000. 5,000. Next is buy plants returned at cost 40,000. By plant. Now, after in this particular question, it has been mentioned that there is a depreciation also. So, we will deduct the depreciation. Less depreciation. Depreciation is 40,000 into 10 divided by 100 into 6 divided by 12, which will comes out to be less 2,000, 38,000. Next is by plant at site cost. $60,000. 60,000 is a plant at site cost. Next is we will also deduct depreciation from this particular plant at site also. It will be less depreciation, which will be 60,000 into 10 by 100 into 9 by 12, which will come out to be 4,500. 55,500. Next is if we will add all these figures, we will get the figure of 9,58,500. And after this, we will work out the profit. Profit will be 9,58,500 minus 3,40,000 and addition of all these figures, which will give you a figure of notional profit. To notional profit. It will be 2,13,500. And total comes out to be 9,58,500. Now, we always calculate profit from national profit as a work certified is more than 50%. As you can see in the question, work certified is more than 50%, so 2 by 3rd of the notional profit is taken as profit. So how we will calculate? Let's do some work notes over here. Profit is equal to notional profit into 2 by 3 into percent of cash received. Notional profit is we have calculated as 9,58,500 into 2 by 3 into 90% of cash has been received. So as per our calculation, 90% of cash has been received. So we will calculate the notional profit, which will come out to be 1,28,100. So here by first of all, this notional profit will be brought down on the credit side. It is 2,13,500. And next is to profit transferred. To profit transferred to profit and loss account. It will be 1,28,100. 1,28,100. Now, from notional profit, we have calculated 1,28,100. From notional profit, we will deduct this figure. This is your profit transferred, and the remaining amount will be transferred to reserve. To reserve brought forward, which is 85,400. 2,13,500 will give you 2,13,500. This is your notional profit reserve. Now, if you can work out, you can write some explanation, since value of work certified is more than 50% of the contract price, 2 by 3 of notional profit is taken. So this is all about contract. For your more elaborative understanding, let me explain. We have taken two sides, particulars, amount, particulars, amount. This is a debit side, this is a credit side. On the debit side, we have written all the material issued, direct wages paid, we have added due, direct expenses, added the due, office overheads, and class purchased. By work in progress, we have calculated work certified. We were given the cash received is 90% of the work certified, and we have also been given information that work uncertified is, so 90% of work certified. So if we will multiply it by 100 by 90, we will get the total of work certified. Work uncertified is 50,000. By materials returned 10,000. By material at site 5,000. By plant returned at cost 40,000 में से हमने we have deducted depreciation, it is 38,000. By plant at site we have deducted the depreciation, which is 55,500, And finally, we got the figure of 9,58,500. From 9,58,000, we will deduct the total of all these two. We will get the notional profit of 2,13,500. Now the question arises how much we need to transfer to the profit and loss account. We need to transfer profit and loss account is 2,13,500, and by this calculation, uh, notional profit, sorry, it's a certain mistake. It won't be 9,58,500. It will be a notional profit. It is 2,13,500. 2,13,500, which will give you 1,28,100. From 2,13,000, we will deduct 1,28,100. We will get the reserve of 85,400. So this was all about the debit and credit side is a profit or loss. So there is also a notional profit in this case. Notional profit is basically calculated when the contract is in